Welcome in. Well, stocks take a dive today with the Dow dropping more than 1,100 points for its worst day since April of 2025. With growing affordability concerns, investors reacted sharply to the Federal Reserve's decision to leave interest rates unchanged amid persistent inflation and spikes in energy prices. Adding to the economic uncertainty, another jump in oil prices due to the war and concerns over the value and cost of AI. Most of the major tech stocks sank into the red today. Also, the Federal Reserve voted to maintain interest rates at 3.5% to 3.75%. It is a level that's been in place since the last cutback in December of 2025. So I want to bring in Emily Russell, a commentary and policy editor at Barron's. So Emily, there is a lot to unpack here, a lot going on. Help us break down what drove the markets down today and then why the Fed decision has investors pretty spooked.
Yeah, absolutely. Today started out as a perfect storm to leave the major indexes in the red. As you mentioned, we've seen a re-escalation in the Middle East conflict. There were reports early in the day that a U.S. Gas storage tanker in Egypt was hit or averted a drone strike there, and that sent Brent crude prices rising. So we are around $90 a barrel again for Brent crude. Of course, this spooks investors that we're going to see inflation increase over the coming months after we saw it drop a bit in June. And then we had the Federal Reserve hold rates steady. And there were only 3 dissents, but those dissenters, those dissenting voting committee members, signaled that what would be more appropriate given the inflation concerns is an interest rate hike. And investors are saying, maybe that's right. Maybe we do need to be a bit more concerned about inflation right now, given the fact that the conflict in the Middle East doesn't seem to be cooling down soon. We also have other concerns around AI spending, how much AI spending on the AI infrastructure build out could boost inflation in the months to come. We've also seen the president announce new tariffs, and it's unclear what sort of economic impact those tariffs might have. But overall, investors seem to be signaling today that they aren't super confident that the Federal Reserve will tackle inflation in a way that they see is appropriate.
So, Emily, one thing we saw today, major tech companies reported earnings today, including Microsoft and Meta, but Meta did take a big hit. So what happened there?
Yeah, that's right. Meta reported their second quarter earnings after the bell today and then fell nearly 10% at stock price. They didn't provide a lot of clarity to investors about what's going on with their AI spending's return on investment. They really leaned into this idea of flexibility around their AI spending rather than providing some concrete guidance on that. They also said that they spent nearly $2 billion on legal proceedings, and Meta will be in trial later this year over some social media cases and could expect to spend even more money on legal proceedings. So investors were disappointed, to say the least.
Yeah, absolutely. Can change each day, though. Emily Russell, Emily, thank you.